Hi everyone, I'm Kunal Sodhani from Shinhan Bank India's Global Trading Center. Once again, here in front of you all to discuss about the global macro trends and how do we see the currencies faring from here on. So first, as we usually discuss, let's talk about the domestic trends. If we talk about the FPI flows, they have been negative to 22,000 crores for the month of October itself. If we talk about the levels in terms of equity or bank nifty, I think 19,000 level was a psychological barrier which broke, and now 18,800 remains a very crucial support when we talk about Nifty. Where else we talk about Bank Nifty, I think 42,340, 350 is a range where it remains quite crucial to watch out as a support zone. Though we have seen certain pullback from there, maybe yesterday as well as today, but let's see how does it fare. But those are quite important levels to watch out from here on. If we talk about the global macro trends, the dollar index have been quite in a narrow range, waiting for the FOMC meeting outcome. Though we are not anticipating any rate hike, though we may see a rate hike in this year, but not in the policy which has started today, which will be ending tomorrow. So the decision will be on 1st of November. While on the other hand, if we talk about the policy which is from the Bank of England, that is on Thursday, which is 2nd of November, where again we don't anticipate any rate hike from their front as well. On the Eurozone, if we talk about, we saw the German CPI number that came in much lower than expected, which was positive in terms of the inflationary trend. Though we saw some kind of GDP contraction, though not that anticipated, but there was still some kind of contraction seen on that part. So euro dollar pairs did see some kind of bounce towards 1.06 levels. But the 10-year US Treasury yields is still, pain which we are seeing. It is just holding that 4.8 mark, currently probably around 4.88. So the broader band which is just trading between 4.8 to 5. We did see once it crossing 5%, but then moving back below those levels. Apart from it, what is more crucial to understand is the non-farm payrolls data for the US, which will be due on this Friday. So this comes every first Friday of every month. So that is quite crucial to watch out for the rate hike if happens for this year from the Fed. All in all, if we talk about dollar rupee, it has been trading in quite a narrow range. It's just a range of maybe 3 to 5 paisa on a daily basis. What's exactly happening? Possibly some kind of intervention has been seen at higher levels at 83.27, 83.28. That is some kind of a cap. Where on the lower end, we are not even going below 83.20. So this is a broader trajectory where it's just in that trading tandem. But the more we have discussed this earlier, the more it trades in a narrow range, the more riskier it turns. If we talk about the cash term levels or the overnight levels, that has moved lower. So possibly it went as low as even 5 paisa, 5 tick, which we say in a normal term. So it went as low as nil, you can say that. So the forwards have been also taking a beating on the right side. So we need to consider that if the spot is holding on to these levels, first the premiums are coming off. There is nothing remaining for the carry traders for that say. Exporters probably are remaining sidelined for some more time, just to confine or maybe seeing if we can see a break of 83.30 levels. If not, they are okay to wait till 83 big figure levels. On the other hand, importers definitely have been doing their bits and pieces because of the lower forward premium, taking advantage of it. But the question remains that if the dollar index from here on, if we take a spike above 107 levels. Also, the crude oil prices have been a bit lower towards $87 per barrel, which is again a blessing for us because it went again back to $93, but then pushed back, in last two trading sessions toward 87, where $83 per barrel may act as a support for the crude. So, in case if we see a spike in crude prices as well as the dollar index moving once again above 107, then I think it will exert a lot of pressure on rupee. Though we are just confined in this narrow range, but till what point is a question? And is it justifiable to probably trade in this narrow range by holding on to a certain level remains a question. So, all in all, what we personally feel for dollar rupee, 83.30 definitely remains an immediate resistance, which have been seeing since last couple of sessions now. But a break of it can easily take it towards right side because a lot of stop losses may be triggered around those levels. A lot of option sellers may move out of that. So 83.60 levels can also be seen if we see a break of 83.30. Only and only we see a reversal if we close below 83.05. We have touched 83.04 as a low in the recent past, but it needs to close below 83.05 to confine any kind of consolidation back. So that's all from my side, friends. Wishing you all a wonderful weekend, good trading session and a good investment session as well. Thank you so much from Shinhan Bank. Thanks a lot.